Hello, everyone. Welcome to this first webinar of the International Token Standardization Association, and short ITSA. Today, we are going to talk about tokenization, digital asset infrastructure, what digital assets are, and what a regulated digital asset infrastructure in Germany could look like. And for that, I'm joined by really great guests, by Großkopf of Börse Stuttgart Digital Exchange, by Matthias Hirtschulz, who's a principal at DeFi and a consultancy, and by Seamus Donoghue, who works for METACO, a custody provider. But before I introduce these gentlemen, let me give you a really quick and straightforward introduction what we do at ITSA, and maybe this is something interested cause for you that you might want to join or learn more about. And if so, you see some contact details here. You can always reach out to me and get to know more. So the International Token Standardization Association, I think the name is already pretty straightforward. We want to bring global market standards to the token markets. Why? Well, we all work in a more finance-focused area of blockchain, and the traditional financial markets are very regulated, and regulation here and standards are really, really necessary to ensure clear communication, to create transparency, avoid fraud. And these standards are currently lacking for the token markets. And so we are really happy that a lot of companies, a lot of startups joined us. Actually, right now we have over 150 members, and we are always expanding, looking for opportunities to create some good tools that will help the token markets mature. And here I just want to highlight 2 of 3. First, we worked on something that we call the International Token Identification Number, or short ITIN. And you see that it's really close to the ISIN as well. So it's a unique, a clear identifier for tokens of all sorts. And now tokens and traditional securities, as we know them, they are quite different, as tokens can exist not only on one blockchain, but we might see shares that are traded on different protocols. And so it's really important to find a way for a cross-chain and also fork-silent identification. And this is exactly what we are working on as we speak. And furthermore, we have proposed something that we call the International Token Classification Framework, or short ITC. And with that, we currently classify tokens among 4 dimensions. We are soon adding a lot more. And this is especially useful for people that look into investments, that want to understand what the characteristics of a specific token are. But it will also be really useful, hopefully in the future, for governmental authorities know to tax or how it's how they have to approach it from a legal perspective. There's a lot of uncertainty, and I think this is the perfect transition to what we want to talk about today. Because what we actually want to talk about is how a regulated digital asset infrastructure would look like. And for that, I am happy to show you our panel. Here they are. And let's start with you first, Matthias. Please introduce yourself and tell us a little bit more about you, about DeFi, and what you do.
Sure. Thanks, Stefan. Good evening, everybody. My name is Matthias Hirtschulz. I'm a principal at DeFi, and I'm heading the blockchain and digital asset practice there. So DeFi is a consultancy with around 1,000 employees. What makes us pretty special is that we have over 90% MINT graduates with backgrounds in physics, mathematics, and computer science. And with this background, we're really trying to bridge the gap between a typical business analyst and a programmer role. So we are very hands-on and help our clients from the conceptual design to the actual implementation and programming. If our clients want that, we can really deliver them a turnkey solution. So in the blockchain practice, we work in a similar way. We enable our clients really to design, build, and finally ship DLT-based solutions. And our projects range from, for example, implementing a DLT-based capital markets platform, or implementing the secure storage of digital assets, implementing compliant AML processes around that, or helping them tokenize assets. So that's from my side.
Hi, so Seamus Donoghue. I work with METACO. I mean, my background is traditional finance, as in wholesale banking for 20 years in most jurisdictions, and I'm from Canada originally, so in North America, Europe, and Asia for 20 years. And effectively, I've also been in the crypto space, ran a crypto exchange, and I am now responsible for sales and business development at METACO. And we're a technology company. I think Stefan at the start said we're a custodian, but we're more, we work with custodians. We provide custody infrastructure to custodians, primarily banks and exchanges. So I'd say our client base is largely the incumbents that are looking to get in this space. METACO's main product, Silo, is basically a full stack solution that enables a firm to integrate these assets into the core infrastructure. So we work with clients in those jurisdictions like Germany, where the regulators are supporting the banks to move. So although we're Swiss, we have very strong traction in jurisdictions like Germany, Switzerland, of course, Southeast Asia, Singapore, and with some of the recent developments, we're seeing more interest in places like the US. Yep, that's it. Thanks.
Okay,
right, finally, I make my introduction, I guess. I'm Peter Großkopf. I have a technical background. I helped to build up solarisBank as my previous job as the CTO. So we found the bank from the scratch. In those days, I also found my interest in the blockchain world, because I always wrapped my head around like how would banking infrastructure and banking processes, and actually also how people use money, how value from A to B. So I wrapped my head around how this would look in the future. So especially in the decentralized world, that was around 2017. We also at that time launched a few projects in the blockchain space at Solaris. And 1.5 years ago, I joined Börse Stuttgart to help to build up Börse Stuttgart Digital Exchange as a CTO and MD. And our mission is to become the largest digital asset exchange in Europe. What digital asset mean, we're going to talk about within the next 60 minutes, I guess, but so much to say already. So we started to build up a Bitcoin cryptocurrency exchange, so we can buy and sell crypto. And BSDEX acts as the technical infrastructure provider for that. Kind of the trading is organized by Baden-Württembergische Wertpapierbörse, which is also a group company at Börse Stuttgart. And we aim to bring more and more digital assets to the trading platform. So that means also anything that digital assets are in the future. And I think now we can start talking about it.
Right, perfect. Thank you very much for the introductions. And I think before we really talk about the infrastructure as a whole, we have to start a little smaller. And actually, I want to start with the question, what exactly are digital assets? And Matthias, maybe you could start there.
Sure. So generally speaking, we understand digital assets as a very broad category. Basically, we are talking about digital objects, obviously, with a positive economic value that's represented on a DLT system, and that can be owned or controlled. More concretely, this means it includes something like cryptocurrencies, like Bitcoin or like Ether, but also includes security tokens, stable coins, and many other types of digital assets. The largest volume currently in the digital asset space is in crypto assets, namely in Bitcoin and Ethereum. So for many of the players in the space, the immediate business case is and was often around these assets, something like trading or custody of these assets. However, the space of bringing actual financial securities on DLT systems is increasing, also due to new legislation coming up in Germany, for example. And I think we will be talking more about these developments later on.
Yeah, I agree. Would you like to add something to that? Otherwise, we can go directly to the next question, Peter and Seamus.
Yeah, probably, and it would maybe also lead already to the next question. So when I explain digital assets to people also from outside the community, so people who don't have like daily contact with blockchain and crypto assets, I explain it as that you can tokenize anything which you can own or that you can use. So kind of like a property right in terms of if I own something, or kind of like in our speech, we would call it a utility token. So kind of something that I can use temporarily and where I can use a token to pay for it or to get access to it. And if you kind of now look on the use cases that are mapped to this, I think property is quite easy because it could be ownership and property in a company, like also in a former GmbH or something, or AG. It could be stocks, could be securities, financial instruments in general. And when it comes to usage rights, it could be a flight ticket, it could be a concert ticket, it could be energy and stuff like that. And I think this, if you come from that definition, you can already see how broad and how powerful blockchain technology and tokenization and digital assets can be in the future, because you can wrap value in digital assets various ways, and this is why it's also so fun.
I mean, I would just add, I think, small detail, but I think we already live in a fairly digital asset world. I mean, I can trade equities with the click of a button, and I see the count change very quickly. But I think what we're talking about in terms of tokenized assets or digital assets becoming native is these things you can own directly. There's no need for middlemen anymore, basically. So it's a completely different empowerment, I think, to the investor, where they control the private key and they control the asset. Now, obviously, there'll still be middlemen. I'm not saying this will eliminate middlemen, but you have the option. You always have the option to be your own bank in this space, which I think is really enables us to reinvent finance as well.
Yeah, I would have to agree. And I think all of you mentioned some really interesting topics already. Especially, Peter, when I think of a Börse Stuttgart Digital Exchange, I would be really interested to hear what you think, what will be tokenized, let's say, in the next years, and also what you prepared for. Like, what kind of tokenized assets do you see traded on the Börse Stuttgart Digital Exchange?
Well, that's a very difficult question, because I think, like I said already earlier, the broad range of digital assets that will be traded in future will be kind of quite wide, and so that there will be a very high number of assets that we probably find already in the traditional world, so like securities. But there will also be the part that will be completely new to everybody to invest in, like I said, like in a GmbH, and have kind of like Seamus said, the transfer of the ownership also in a digitized process in a streamlined way. Because I think at the moment there are asset classes that are very hard to get for traditional investors, because probably they don't have access to it. So like, for example, startup investments and something like that. But at the same time, there are also asset classes that are very undigital. For example, if you buy an apartment in Germany, so there's no real digital register for it. So the process is with involvement of a notary and so on and so forth. And what I personally see very attractive is also to bring those kind of transfers of ownership to the blockchain, and making those assets tradable. And so that's probably something where also the whole space is paying a lot of attention for. But then there will also be kind of new asset classes, like I always use the metaphor of like paintings and buying art in a digital way, because to buy a Picasso is probably something that most of the people can't afford, but having a fractional ownership in like a piece of Picasso and using this as an investment class, that could be possible in the future. And wrapping this all up together means to me that portfolios of retail and institutional investors will become more wide than they've ever been before, and people will have the freedom and access to those asset classes. And BSDEX, like I said earlier, started with cryptocurrency trading kind of as paving our way into the whole space. And what we aim for is to become the secondary market platform. So in technical terms means the trading venue where I can trade all those assets and where I have a liquid market. And we want to become that for these digital assets.
I mean, maybe I can add to that. I completely agree that I think there is no reason that certain asset classes might be excluded per se. So you just described very nicely how many different possibilities there are. However, I think that due to the maturity and the regulation of the ecosystem, some assets will be tokenized earlier, some will be tokenized later. So, for example, currently there are a lot of projects around real asset tokenization. So, for example, the tokenization of real estate. And because they can address already today certain pain points, like with regards to access to the asset class, with regards to liquidity, or maybe with regards to overall process costs. And then I think with regards to financial assets, there will be instruments like bonds or participation rights that are started to be tokenized already now, and maybe instruments that do not so heavily depend on secondary market trading, like certificates and things like that. And later we will also see like company shares or more complicated structures to be tokenized.
Yeah, I mean, I think we see on our side, obviously, given we're working primarily with the large banks, we see a lot of experimentation by the banks around tokenization. I mean, they've all started with the business case around crypto custody, and that's why they've launched an infrastructure. But what we often see them now looking at traditional assets, bonds, equities. But I think that's more for them to understand the use cases and understand the processes and how this infrastructure can manage that. But I think when you look beyond that, I mean, we have pretty efficient markets, at least in the developed world, around bonds and equities. But that said, they're fairly blunt investment instruments. Basically, if I want to invest in let's, for example, a green energy project, and the best one's by BP, but an oil exposure, it's very hard to invest in BP if half or 3/4 of investments are not what I want. Projects are tokenized flows, are tokenized portions of the company. Equity markets are basically listed, or how people list basically equity, and really break it down into the components and effectively optimize your set around portfolio design, basically. So I think you've got possibilities there. I mean, when we look at private banks that we work with, there's a lot of, again, going back to some of Peter's comments, bringing liquidity to what are fairly bespoke investments that are available to very few, things like private equity or VC investments. There's a great opportunity to tokenize these, and effectively by democratizing them, you create more liquidity as well. So we see a lot of projects in that direction as well. And of course, I would agree with on the comment around real estate. I mean, that's another area which is we're seeing a lot of projects so far.
Yeah, really interesting. Thank you. And now I think everyone listening in today sees how broad this topic is, and for example, why we as ITSA also work on a classification framework to distinguish all the different ideas from another and make it a little more tangible. Matthias, maybe I think what's good now is to understand how the infrastructure look like. Maybe you could show us how one of these tokens that we talked about, what their life cycle is. How do they get created? At which point do they get the rights for real estate ownership of a painting, fractional ownership, all the stuff that you talked about? What's the life cycle of one of these tokens?
Okay, sure. So the life cycle of digital assets has some similarities and some differences compared to, let's say, traditional financial assets. So the general process actually is very similar. So it starts with the primary market transaction. So meaning in the traditional world, you would call that an IPO. In the blockchain world, you would call it, for example, an STO, a security token offering. So that's when the asset actually is sold the first time to investors and enters into life. Before that, I mean, there might be a lot of structuring around the asset, about the legal structure and things like that, about the drafting of the prospectus, if that's needed for a security token. But then the primary market transaction happens, and then the token or the asset might be traded on a secondary market. So these are, for example, currently the crypto exchanges that allow for Bitcoin trading, for example, like BSDEX. And then dependent on the type of asset you will have during the lifetime of the asset, you will have different kinds of life cycle events. For example, dividend payments. And then at some point, if that's the case for this asset, it reaches maturity. So in the blockchain space, this is called burning, and the token is basically removed from the smart contracts. So that's the high-level process from the primary market, secondary market, and then all the life cycle events like dividend payments. The biggest difference I see to me in difference lies in the technical representation of the assets in form of so-called smart contracts. So that are basically pieces of code that are represented on the blockchain, and then that describe the properties of the asset. And this representation in form of smart contracts has an impact really on the types of assets that can be created. And we have talked about that suddenly assets become programmable. Suddenly we can create assets that wouldn't be able to be, let's say, represented in a traditional securities markets infrastructure. And it can also have implications on the market infrastructure that is needed for these kinds of assets, and also what will happen during the life cycle. So, for example, we can think about, with regards to the programmability, we can think about what additional functionality could this asset have. It's not only about, maybe you have heard about the programmable euro, the programmable fiat money on the chain that allows for delivery versus payment, automated delivery versus payment mechanisms, or maybe voting mechanisms, or as was mentioned, additional utility functionality that's attached to the asset. Also, the infrastructure, as I mentioned, I think will be different. So, for example, there's a strong technology component about the infrastructure. So the private keys that control the digital assets, they need to be securely stored. And technology providers like METACO, they're focusing exactly on this critical infrastructure part. And next to the technical side, however, I think there's really implications on the general, let's say, infrastructure provider. So the roles in the industry are really reshuffled. So, for example, we see that asset managers are starting to offering suddenly custody services, or that central securities depositories, there are new opportunities for services of handling a decentralized securities register, things like that. And finally, there's aspects you don't have in traditional assets at all, that are really connected to the underlying blockchain protocol. We call it blockchain servicing components. So, for example, you might need to deal with hard forks of the blockchain. You might have opportunities of so-called staking. You can stake assets in certain blockchains to earn additional interests. Or you might want to participate in certain financial transactions like lending, like DeFi protocols. All of these is completely new aspects to this life cycle of digital assets.
I think this was a really broad introduction and explanation, and I think it would be best, because my next question would be which parts of the infrastructure that you mentioned would be different. And let's start with Peter. As a digital exchange, and I know you don't only do or offer an exchange, you also spread into custody, as you mentioned. So what do you think are the essential parts that are necessary for this digital asset infrastructure? And maybe what are your insider views on it?
Yeah, I would actually like to add like a tiny bit also to what Matthias said, because I think he said it in one side sentence, but I would like to emphasize it a little bit more, because obviously there's the nature of the blockchain being decentralized, which means that part of the infrastructure itself is to be able to make OTC transactions, so kind of to transfer assets or value from one person to another, and do this just through the private key infrastructure. I think that's what makes it so interesting, and I think this is also the big improvement, to be able to transfer assets directly without a middleman if you want so. Probably this is where let's say the problem kicks in, that it's then very difficult to find buyers and sellers and bring them together and actually to generate liquidity. And this is where exchanges like us come into play. So we are like a place where where buyers and sellers of a digital asset can meet and kind of find a deal, and then the whole processing is done. And I would like then to add like a second aspect that came with the first thing that I said, that at the moment there's two different approaches of doing that exchange. So there's like centralized exchanges and there's decentralized exchanges. Let's start with the second one, with the decentralized exchanges. This is kind of the creation of a liquid market, and having that like exchange functionality in the decentralized way. So where buyers and sellers can meet on that decentralized exchange, which is probably from the technology perspective what kind of the maximalists really would like to have in the future. So kind of that I'm able to trade everything against other people without involvement of too many middlemen. I think the presence or the reality that we face today is that we're acting here in the regulated space. So if we're dealing with securities, with financial instruments, we fall under capital markets regulation, which comes kind of, or which is there like for a couple of years already. And therefore we need to find ourselves also within that rule set. And this is where the centralized exchanges still provide benefits, because in the end, we and other companies can make sure that the trading of digital assets is organized in a way that it complies with the laws. And that's probably the biggest aspect that we bring to the table, being active in financial markets since 150 years, so before I was born, actually. So we make use of that experience and apply it to the digital assets. now coming to your question and also to that link to the custody piece, I think the beneficial aspect of the current situation is as well that the technology enables different players to also offer services. So, because in the traditional world we have a very centralized way of storing assets. So there's the Zentralverwahrer, how it's called in German, and so there's only a single company that's providing the service of a custody. And I think the huge benefit, and this is also implied with the term decentralization, because decentralization doesn't mean it's peer-to-peer. So like everybody is his or her own custodian. Decentralization also means that there's like a few hubs inside the system. So which means that we are working towards a new environment where we will have a lot of exchanges, where we will have a lot of custody providers. So where we also don't fall under this kind of risk that if one party kind of has a bug or whatever, that the whole system stands still. Decentralization means we're providing services on the shoulders of many, and I think this is the huge benefit that also Börse Stuttgart is providing. With BlockNox, a custody service, which is also at the moment implemented with BSDEX, so it's kind of coupled at the moment. But in the end, also we are rather flexible to integrate with different custodians, because in the end, this is how decentralization is meant to be, and also how we see it for the future, so that things get more decentralized.
Really interesting to hear, especially I'm seeing an institution like yours or a big traditional exchange also embrace the idea of decentralization. Seamus, I'm wondering what your thoughts are on the critical parts of the digital asset infrastructure, and also how, as a service provider, you view the developments in the custody space in general.
I mean, I think given where I'm coming from, I think the first answer is going to be obvious. I mean, keeping the keys safe is obviously critical when we talk about anything in the digital asset crypto space. When we go through basically let's say the tokenization and all the corporate actions that Matthias went over, a lot of these involve basically, transfers of money, transfers of ownership. These are critical functions. And what we find is these are basically they're obviously threat vectors. So I think one of the things that's key is not just keeping the keys safe. And this is the same thing with regard to what Peter said about transferring and trading. You need governance of these processes. Whether you're talking about who can mint, let's change the terminology, who can issue these things, which we would talk about minting in the context of a digital asset, or who can transfer, so they're changing the ownership from one person to the other, so from one wallet to another. Things like a coupon payment, when that can happen, what's the size it's going to happen. Some of these things you want to control who and how and when these are done, and you need basically a framework that basically can support what's a fairly complex workflow around this. I mean, you can just imagine the bank, when a large global custodian or security services organization, when they're processing corporate actions, there's a lot of checks. It's not just let's have 3 people out of 5 sign this transaction. They basically go through risk control, they go through compliance, they go through basically making sure all the client information is correct. There's a lot of steps they can go through. Well, I think you need a technology infrastructure that can support that sort of complex risk flow for highly regulated organizations, because these things, if they go wrong, it's quite serious, because as Peter said, it's no longer a trusted network of 50 banks and you can call each other up and cancel the transaction. These assets, once it goes out, basically the private key is in control of somebody else and they own that asset. So the governance, I think, is a critical component that can't be understated as we move to a more and more kind of tokenization sort of based capital markets. In terms of the overall state, I think what we've seen as given we're focused on banks, all the banks they're all very excited about the tokenization space, but I would say their first business case to justify building the infrastructure, particularly I would call them almost pioneers, because some of it's a bit of leap of faith when we've seen some of these banks go live, is look at cryptocurrencies. But that's only because that's an existing asset class, and they all view basically that it's a much multi-trillion-dollar opportunity looking at tokenized assets. But that space is still not yet defined. I mean, I think Peter's absolutely right. You need exchanges, liquidity pools. Centralized exchanges will play a big part in that. For tokenized securities, those don't really exist yet. I think there's obviously bits and pieces here and there, and I think there's some interesting issuers and there's some investors, but I think the lack of liquidity has constrained the market. But I mean, I think the technological infrastructure to support the market is there now.
To add to the aspect of decentralization. So I would say that we in the future we won't live in a fully decentralized world, and there will be still room for services at the edges of the blockchain, let's say, and so really I think really crucial for the space to get broader adoption, that we have really a, let's say, full stack infrastructure that's supporting these kinds of new assets. And this infrastructure is currently developing, and also established players are moving into the space. And to me, really, the foundation for this infrastructure is really the safe custody of these assets, because it's the basis of the infrastructure. It's the direct connection to the blockchain, and basically it enables all the functionalities upstream that with regards to the assets. So if the custody service cannot support what you want to do with your asset, it cannot support smart contracts or voting or other things, you cannot expose it to other services, to your clients. So really, it's a place where you can actually add value for your clients, dependent on the services you're offering, really from exchange to custody and others. And so for many players, I think it's really a core of their digital asset strategy to think about how they want to handle the custody part. And I think another important aspect there is that really allows the companies also to build up knowledge in the space. So I think in the end, for broader adoption, we need basically all the parts of the infrastructure, but many of them start with the foundations and start with the custody notion.
Okay, so I understand that on the one hand, we need custody as the foundation. I think this is also the reason why, especially in Germany, we see a lot of young startups really getting funding and doing a good job when it comes to custody. And also, for example, Peter, you guys branching out. But what you also mentioned is that we need liquidity and asset classes, tokens, with a large enough volume that it gets interesting for the traditional I think paying close attention, monitoring what's happening in this new blockchain space, but a lot of them are still waiting. Apart from the volumes of tokenization, do you think there's some other obstacles that are in the way, especially now looking at Germany? And what would those be, and how do we get them out of the way? So let's say people are educated and the token volumes get bigger and bigger. What are some essential parts that we still need to get right? Who would like to go first? Or was this too much of a question?
Well, there was actually, I think, 15 seconds missing in between, but we can interpolate it a bit, and you can tell later if we hit the answer correctly. So I think also coming back to a bit what Matthias and Seamus said, kind of the technology and also the technology companies that are offering, for example, solutions for custody, for being a custodian, so like METACO. They kind of, so it implies that if they do their job right, then everybody does its job right, and assets are secure. But there's the other component that probably also led to Bitcoin, and it's trust, because I think like the whole banking sector always thought as banks are banks, people trust in them because because the customers believe that they're doing their job right. But in the end, we're now kind of in the situation right in between of each other, so that there's a new technology and there are new players hitting the market. So you were talking about the new startups that hit the space and who obviously don't have such a large number of years, and so they are not that famous. So which means, how do they develop trust? And I think this is where now also the regulator is hitting the space, because as the popularity of crypto assets and crypto asset trading is developing quite significantly during the last 12 months, and also the interest in decentralized finance and getting some interest rates out of lending and so on and so forth. This shows that with this rising interest in investing in the decentralized finance, that there's kind of probably a new bubble coming up, and I think laws and regulations somehow also are made to kind of provide a rule set where people know, like, okay, so if a company or if a provider or if a startup follows to the rule set, then they're doing their job right, and then everything is fine. And yeah, so I think we're now in this crucial situation that the whole space gets regulated and gets new laws and so on. And we need to make sure that we get the right ones, because I think the easiest is to do everything 100% like we did before, so that there's kind of existing licenses, and we apply the new blockchain world to the banking license of the past, and we're done. But I think this doesn't lead us anywhere, because the past showed us that we can't trust into banks. And I think so. Just talking about the trading part and security tokens. So I think there's still a mile to go, because at the moment the trading of security token, for example, in Germany, would not that easily possible. But we're seeing, for example, developments with this new proposal for the digital securities law, which kind of provides like a legal foundation to companies that they can hold digital assets like security token in the future, and then there's kind of a guideline how to transfer them and then also to trade them. And I think this is kind of the last 12 months have been pretty exciting to see the digital custodian license coming in Germany. Probably the others are telling a little bit more about it. And now there's this first approach for the digital security, and I think there's more to come within the next months.
Okay, thank you very much. Unfortunately, I had some technical difficulties on my end. Sorry for that. But now we are back. I hope, can you understand me? Okay, awesome. Really sorry, the internet is not doing what it's supposed to do today. But yeah, to pick up on your question, I think it would be really interesting also to hear Seamus' view on, now that we talked about regulation and what it needs, as a Swiss company, how you see the developments that we do here in Germany and how it compares to what's happening in Switzerland, and maybe a personal opinion if you think maybe one of both systems is better, or how they compare to each other. What do you observe essentially?
Well, I mean, I'll give some high-level observations because I mean, I don't get into all the weeds of the regulations, but I mean, I think I think FINMA was one of the first to move. The Swiss regulator is one of the first to move, and I think what they did a very good job was with a very clear taxonomy around the asset class. What's regulated, what isn't regulated, giving the banks a very clear roadmap for how they, and when they look at certain asset classes, defining custody. I think that was very important, whether it's segregated accounts or things like commingled omnibus accounts, and what the implications were. So I think the FINMA was one of the, let's say it, trailblazers or pioneers in this space. The Swiss, we saw a lot of innovation out of Switzerland on the back of that. I think Germany, though, I think BaFin has very rapidly caught up. And I think we're seeing as some very different dynamics in the two markets. I think the Swiss market is, for the startup space, has been very exciting. There's a lot of technology companies that have responded to the FINMA rules. The banks, I would say, are quite a bit slower. There's obviously been some new banks that have launched business in this space. I mean, there's companies like Signum, which is Signum and Seba, or these two digital native companies. They launched the first crypto banks to get licensed in Switzerland. But the large incumbents have been fairly slow to embrace this asset class. They've been much more cautious. And the smaller banks have not always had a technology focus, so it's been more difficult for them to adapt and embrace this. I mean, a lot of people think about the definition of Swiss banking historically was really about privacy. So it was your bank account balance on a napkin across the table. It wasn't about e-banking. Whereas the German banks, I think, are much better have been much better positioned from a technology perspective, that they view this as a business opportunity that they can leverage on. And I think BaFin has done a great job, as you mentioned, on the digital custodian regulation. You've got obviously a number of banks that either got grandfathered or applying for the license. And now with the security law, they're bringing that up to date to really kind of to get away from this physical world a bit more. I mean, you don't necessarily have to have a physical certificate for different securities, which is obviously a massive impediment to let's describe it as true digitization. I mean, we should be able to live on the blockchain and have transfers. Your record of ownership basically be all on the blockchain. So I think BaFin is now a roadmap for the rest of Europe. I think that there's a good opportunity for the rest of Europe to embrace the rules that have been set down or that are being established in in Germany. And I think we're seeing the German banks respond very positively to this. And I think other regulators in other jurisdictions in Europe will look at that as very instructive and as a good path to follow.
And maybe just a very quick comment about this. I mean, sure, there are other smaller jurisdictions that traditionally have faster, more progressive regulation in financial markets. But really, as a large economy, I currently see that Germany is really at the forefront with the mentioned regulation on custody license, and also now with the draft bill on electronic securities. And I agree that this has brought a lot of movement in the industry, and let's say, so to say, it allowed traditional established financial services companies to move into the space, because there's some kind of legitimization of such a service by the legislator. And I think this opened up the doors for a lot of banks, established players or exchanges or others to move into this area.
Okay, thank you. Peter, anything to add from your side?
No.
All right, awesome. Then maybe one of the last questions, and just as an information, I really hope you can hear me well in the chat as well. If you have any questions, feel free to post them and we will read through. Now, Matthias, one topic I know you personally looked a lot into is the current draft here in Germany when it comes to securities as digital assets. Would you like to go a little deeper into that?
Yes, sure. So before the draft bill, so to say, there was a physical paper form requirement for so-called bearer bonds. So you need to have a physical piece of paper. And with this proposal now, this requirement will be removed. So you can have, first of all, you can have fully digital financial assets, and the physical paper form is not required anymore. So this is the first main point here. The second aspect is that the scope of the bill currently is for so-called bearer bonds. In Germany, it's called Inhaberschuldverschreibung. That basically means you can have electronic bonds, you can have electronic participation rights, you could have electronic certificates. So it's already a pretty broad scope. However, it doesn't cover actual company shares or investment fund shares. So, but also they said in the rationale for this proposal that this will come in following initiatives because there might be more difficult, complex legal challenges to address. And really the third really interesting point, I think, is that these electronic securities need to be registered in securities registries, and they can come in two forms. One form is, let's say, the classical centralized version where you have a regulated CSD, but there is also the possibility to have a decentralized register, and the institution, the so-called registrar, that's responsible for maintaining this register doesn't necessarily have to be a CSD, a licensed entity in that sense. So this might be an opportunity here for opening up competition in this space. However, one needs to keep in mind that still keeping this electronic register will still be a financial service according then to the German Banking Act. And maybe the fourth very important thing I realized, or I found pretty nice, is that there is no per se restriction in terms of whether it's a public or private permissionless chain. In principle, it can be a permission chain, it can be a public chain. So there is no exclusion of this possibility in principle. However, maybe let's finish with what I think are still, let's say, kind of the problems with this bill is a little bit around uncertainty of what finality means in that context, because there's a requirement that the transactions on the DLT system need to be final to some extent, and whether a proof of work Ethereum public blockchain fulfills this requirement is currently not 100% clear. I think the second point is with regards to, let's say, risks and liabilities of this registrar. So what kind of risk do I have if I keep this register and something happens with the blockchain or assets get lost? So what kind of liabilities do I have there? I think that this needs some clarification. And finally, I think one aspect will be to have more details on when actually a CSD license is required, because from the construction of the bill, it's in principle not necessary for the crypto register, so for the decentralized register, to have a CSD. But then in the rationale, it's argued that in certain cases, it still might be the case that due to the task that register is performing, that it's still a task of a CSD, and then you need a license again. So this is kind of the risk if you start as this registrar. And I think that needs more clarification as well.
Yeah.
Peter, I saw a lot of nodding from your side. Is there something you want to add?
Yeah, actually, I would like to add something because so how the law is written, it looks like that you could use also permissionless blockchains for that register. But I think the practicability of some of the requirements that are formulated in the law will make it quite difficult, because in the end, if the let's call it crypto custodian or crypto security custodian needs to provide by request names and identities of an owner, this means it's centralized to some extent, because otherwise those identity information wouldn't be present, because we don't have a digital identity yet, or like a digital self-sovereign identity. Therefore, so my conclusion with that law is that we as the community really need to make sure that this law can be interpreted in a way that permission and that we also get kind of like really like a substantial agreement on that, that we can use permissionless blockchains for that register, because otherwise we will create a financial ecosystem like it was before, and I think that's not what we're aiming for. Yeah, but I think there's still some room for interpretation. It could be interpreted left and right, and I think that's it's too dangerous to leave it open like that. I think we need to have that clarification that it really paves the way for decentralized finance.
Absolutely agree. I think we are in really interesting times, seeing regulation, especially also in Germany, going forward now. So maybe to end this webinar, could all of you share maybe in 1 to 3 minutes what you think, where we are headed in 2020, maybe the next 6 to 12 months, and what you are most excited for when it comes to digital assets? Starting with you, Matthias.
So I think what we will see in the next year is the first established players in Germany moving forward, especially banks and also exchanges, strongly moving forward with services offerings, for first of all to institutional clients, and I think a start could be in the area of custody services. And I think what is really crucial, what was mentioned also before, is that we get the regulation right, and really enable with that a broader adoption of the space.
Okay, thank you. Maybe you next, Seamus. What are your thoughts for the next 12 months?
Well, I think we're going to see a little bit more of the same, but at a much faster pace. I think we're going to see more large incumbent banks get in this space. I think their initial launch is going to be around crypto custody, but all of them have an eye on this tokenization space. I think it's still unclear what exactly will be the first the first kind of liquid tokenization markets. But I think it's clear that as these new larger firms come on board, they also bring the potential for much deeper liquidity. And can contribute to creating much more deeper liquid markets for firms like a Börse Stuttgart that obviously need some of the large, that actually benefit from some of the large banks coming in and being liquidity providers, bringing quality issuers and quality investors to both sides of the equation. So I think we're on the cusp of that happening. I think that still, from being a commercially viable business, tokenization, I think still has some more room to go, but I think the groundwork is there, and the regulations, as Peter highlighted and Matthias outlined very well, needs to be done right. So basically, that we're not just recreating the old world, but I think there's enough people, for example, the people on the call, that want to get this right, and hopefully have a voice being heard to get that done.
You go last, Peter.
Yeah, all right. So my comment would also go towards adoption. Or like increasing adoption, but I would see it either on the retail side and on the institutional side. Maybe going for the retail first. I was highlighting permissionless blockchains a little bit earlier and decentralized finance. I think the big benefit of the permissionless blockchains and that whole ecosystem over there is that they have the highest speed and innovation. So kind of all these developments, so that we're talking about tokens today or about digital assets, was driven by the also open source community that acts on permissionless blockchains and drives innovation. And in that space, we see decentralized finance and kind of building a foundational banking layer that really covers all services that banks are doing. So kind of like doing lending, investing, getting interest rates, having relatively stable returns over there, and also in form of staking, for example. And I would guess that within the next 12 to 16 months, we will see a lot more retail users, probably also the ones who were a bit burned in the ICO hype. They get back into the space and see that there is something developing which is very sustainable, and unlike like the ICO hype times where everybody, I don't know, wanted to get rich or whatever, and was frustrated afterwards. So therefore, I'm pretty keen to see kind of a lot of attention getting into that space. And on the institutional side, I think also we with our project as at BSDEX and Börse Stuttgart, we're really paving the way for the bigger institutions so that they can collaborate with potential partners that act on the same eye level. So there's our hope that we can now lead these institutional players, be it asset managers, order flow providers, banks, and so on, also into that space. And well, as we know, kind of the traditional institutional space is a little bit slower. So therefore, the retail users go first with the real modern stuff. But I think there will be the point in time in the future where both meet and where we have kind of created a completely new capital market.
Okay, thank you to all of you for joining us today. I think, Peter, your closing words are perfect. I really also think that after the first initial crypto hype and then crash, a lot more sustainability and sustainable developments were made. And I really hope that we will first see some more retail adoption and then bringing all the bigger, more traditional investors and companies into this blockchain space. Again, thank you very much. Thank you also for listening in, for viewing. We will send you some information later on, and hope that you also tune in for the next webinar, one hopefully, and that I won't have internet problems, which is pretty ironic now that we talk about high tech like blockchain, and still the internet connection isn't perfect. Well, stuff happens. I think this was really interesting. Thank you, and I look forward to talking to you guys again. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye-bye.